Welcome to another episode of Crypto Miner, guys. Today we are going to be analyzing what is happening regarding the Cardano price. We are going to be explaining exactly what our price targets, what we are expecting and why regarding the Cardano price. ADA is going to surprise you. And of course, don't forget to scroll down, smash this like button, costs nothing from your time, guys, and subscribe to our channel so we can reveal the most insane video regarding to if we are in a bull or bear market for Bitcoin and how, when this is going to show up. Let's go directly to the chart. Jumping in the chart for ADA Cardano, what we are going to see at first is the 4-hour time frame. What we have been expecting, everything that played out exactly as we said, exactly as the plan was about to go. So what are we expecting from now on? Okay, if you are guys coming right here, I gave a prediction price of the 3.33 right here. Why and how this came out from. So as you can see, I'm going to pull my Fibonacci extension level, as you can see right here. So we are adjusting to the approximately 1.618 extension level is coming to the approximately 3.43. So of course this is going to be a dangerous area because everyone is going to watch right here. So I'm trying to find out what are the next price targets and how we should see if this level is going to really play out and how. So guys, if you are going closer to the chart by deleting this Fibs extension right here and the price target, I came a little bit earlier and I said that this one, the 3.33, is going to be an important level long time ago. This is the reason why I was expecting this. So as you can see, as far as you can see right here, we have to prove that this level, it should be the correct one. So we should find more patterns that prove this thing correct. Okay, so we go directly to what we have in the charts, and as you can see right here, we are expecting and we are thinking most likely that this is Elliott wave pattern unfolding. So what is the Elliott wave pattern? You can go just right here and you can see that we have 5 waves. So we are going to measure this price target from here. Okay, so we are going to watch that this is the wave 1, 0 and wave 1, and this is the wave 2 and this is the wave 3. Okay, the most like scenario. So the Elliott wave should go just like this, and somewhere approximately to this area we should prove, okay, that the wave 5 is going. So it's gonna come here, here, there. It doesn't really matter because eventually we should just have to prove first of all that this area is very important and that we should also give a price target so the corrective waves start coming after that, because we have 5 waves that they go to the upper side or to the downside. It depends what kind of Elliott or inverse Elliott waves you have, and of course after that they are coming 3 corrective waves, okay, that they start from the 0. Okay, we're going for the corrective wave that should be lower than the last wave 5. Okay, so the corrective wave should become lower than where the top of the 5 wave is coming. Okay, and then we should ask for a confirmation so we can find the wave B right here. Okay, after we find the wave B, all that matters is to find where the C wave is going to come and land. Okay, so what we should see, this is a potential pattern that it could easily not play out. We don't know about this yet. Okay, so what we should see is the fact that we should watch, okay, when we have an ascending broadening wedge or a pattern that actually goes this way, we should start watching some bearish divergence coming in. Okay, so this is the one thing we have. So we have 1 point here, 1 point here, 1 point here. So what we should see is that by Cardano breaking to the upper side and touching the level B, this divergence should come and get attached to over this resistance line on the other side. Okay, so this is all that matters. We have to find this touching point to the other side so we get pretty much confirmed that the wave 5 is accomplished. So after we find the wave 5, okay, then we are searching for the level A. The level A is something that should be breaking a kind of support level. So if we had a support level that starts from here to here, okay, this A should break it. That's why we say that the A level and the B level should be lower, okay, than the 5. This is 0 now because the corrective wave, but the 5, as you can see right here, okay, is the normal wave that should come and touch this point. So what we should see is that the A level is coming to approximately from here to here, not lower than the 4 wave, okay, because if it's gonna come lower, yes, it could still be Elliott waves, but many things are changing after that, okay. So we are going to explain further in other episodes regarding this, but what we should see here is that the Elliott wave shouldn't be lower than the 4, okay. Even if it comes lower, it shouldn't be like with further distance. So let's say we are holding the level A, the wave A, corrective wave right here, okay. The level B should come for us to understand where the level B, the level should be. It should be lower than the new all-time high that is going to create here the Cardano, okay, most likely, because it's going after this level. We are going for a new all-time high, so it should be lower. So we can see a kind of confirmation either here, here, or here, okay. And also we should see a kind of double top. So if we don't see a double top, then this one should be kind of lower, okay. It should be within this kind of levels. Depends where the wave A will come. After this is a special technique that I'm going to reveal later on in another video, how we find exactly the C wave, okay. So what you see here is that we most likely are going to the wave 5. How can we prove now the wave 5, okay? How we can say that, do you know what, it's most likely it is a scenario that should break to the upper side. So we go to the 15-minute time frame, okay, and we watch perfectly that right here, okay, we have a resistance line coming in. So we are breaking now this resistance line very clearly, okay. So we have pumped all the way up, okay, and also we have one more support line right here that creates what we call the bull flag, okay. So this is a bull flag that broke to the upper side. If you zoom in, okay, it's perfectly designed here. You can see it very clearly that we have, okay, 1, 2, 3, 4 levels to watch, and this was an inverse head and shoulder pattern that was showing that this level is going to the upside. But here it's a small thing that proves that doesn't really matter. In this case, you should design it with another way, so this can prove you that this is a correct inverse head and shoulder pattern, because here we have 1, 2, 3, 4 levels, and here is a fake out and it gets overextended. For the inverse head and shoulder pattern or the head and shoulder pattern to be correct, we should have 4 touching points, okay, that they are in perfect alignment without overextension. So if you take this upwards, okay, it proves perfectly, okay, that we have 1, 2, 3, 4 levels to watch, perfect for an inverse head and shoulder pattern. And the inverse head and shoulder pattern in this case, in the head side, okay, so if you are taking the inverse head and shoulder pattern right here, it should turn green to the trading view, okay. So the head should be the lower distance, okay, and the head doesn't go here, okay, it goes here. So now it turns green, as you can see so far, okay. So we take this side and we are adjusting it right here, so it proves perfectly that this is an inverse head and shoulder pattern. Why? Because here this level is not touching the resistance line. It shouldn't touch, okay. We need only 4 places, 4 points, 4 targets to watch okay, 4 touching points, so we can prove perfectly that this is an inverse head and shoulder pattern. So how do we count this one? We take from the resistance line until the head and we adjust to the upper side. This was showing perfectly that we are about to break this inverse head and shoulder pattern after we broke out to the upper side. So what we needed was volume. So the breakout is perfect because it has volume on the upper side. Okay, this is the first volume, this is the second volume that came. Very nice. Okay, and what we do from this side is that we can also take the Fibonacci extensions on the inside of the inverse head and shoulder pattern, and we see perfectly that it's touched the level 2. Okay, as you can see right here, it touched perfectly the level 2, and the next level you should watch is 2.618. So the first level was the 1.618. I would take profits here. It came perfectly to touch. I would take these profits. And then the second wave was the 2.618. It didn't touch exactly for the reason why this is overextended. So however, if you took profit so far, that's a very good decision. If you are expecting to watch further on what is going on the higher time frames, you go back to the 1 hour chart and you see perfectly that this was an insane bull flag. Okay, so this is the pole. Okay, we take the pole from the last W that broke to the upper side and we adjust it, okay, on the top of the breakout. So perfectly, as you can see right here, okay, we are level that we have been watching on the 3.33. Okay, so what is happening right here is that this is a decent breakout and we're most likely going to touch the 3.268. Okay, what I'm going to do so I can be sure that I'm touching this level, okay, is to count my Fibonacci levels from the local high, from the swing high, okay, to the swing low. It is approximately right here. I have to delete this. Okay, so I am coming right here and it breaks, is in a perfect alignment. As you can see, the 1.618, the golden ratio in extent, okay, it comes directly to the bull flag price target. What I should do is to take this level and lower it under, okay, so I can take the short money. We are searching for short trades and not for the most of it. So we are not searching and we are not trying to get the profit that is on top. We try to get the short profit. So I'm gonna come and get this earlier on what this level is showing. So my price target, my new price target, is of course coming lower, but it's still much more precise. Okay, and it comes to the level of 3.218 right here. So the level 3.218 is the next level I should watch, confirm, not by 1, not by 2, but from 3 points. So as much as I analyze this trade, it shows perfectly it's gonna come. Okay, it didn't come yet, but it's going to come to the approximately 3.218. So this is the level I should watch. I hope you like this analysis. It's nothing for you to just press the like button. Please guys, do it and subscribe to the channel for more analysis. Don't forget to press the bell button for all the notifications. Don't forget to do this. Okay, so the Elliott waves, the level 5 should be approximately to this level. After this level, okay, is gonna show a perfect resistance point to the approximately 3.219 is going to be my price target. Now if you entered this bull flag breakout, then what you should do is to start taking profits before, okay, this is not financial advice, but before the psychological resistance of the level 3, because you never know, it should be a take profit area. So this level, by also the previous Fibonacci's that I pull out, as you saw before, it was coming to approximately this level. So I'm always taking profits before the psychological resistance that the top is pressing, because you could easily see a double top playing out and pulling you all the way down, and this also could be a potential, okay, corrective wave right here. Okay, so as you can see, we have a kind of 1, 2, 3, 4 touching points over here, and this could easily can be a corrective wave B. Okay, so we could have like, let's say that I delete all of this right here, and this could play out by this way that no one can really imagine. Okay, it could play out this way. Okay, and the level 5 was here, so nobody knows. So this, after it broke down, okay, this could be the level A to watch the downside, something that could also happen. Okay, the corrective wave that is perfectly under, okay, it is not going under the level, the wave 4. This could be the B, okay, and we try to find also the C level that could go all the way down. Also, that's why I'm dollar cost enter and I dollar cost exit in every trade. Why? Because I take profits before the bad thing is about to happen. If a correction should happen, you could also test a scenario like this. You should be open-minded and every time test all the possibilities and what could happen in case this is going to break to the downside. Okay, so be prepared. This is a very nice move and another setup that you should also watch and another technical analysis. Okay, thank you so much for watching. Hope I see you in the next episode of Crypto Minder, and have a good one. Bye bye.